Welcome to another edition of Focus on Alternatives, brought to you by ADISA, the Alternative and Direct Investment Securities Association. For more content like this, please visit adisa.org and check out the resource library. My name is Greg Moz. I'm your host today. I'm joined by Kyle Kadish. He is the Director of Capital Markets at IBN Financial Service. Thank you for being here today.
Greg, I'm glad to be here.
So we're going to be talking about how direct investments drive the economy. Let's just start there, and can you unpack that statement?
There's a lot in that. So here at ADISA, all the sponsors are looking for capital formation. They have an idea, whether it's a project or a property, and a way to develop it and help that capital grow. Let's take a step back and recall that traded markets, specifically with stocks, the company already has the capital they need. This trading is just happening between owners and selling and buying those individual shares. So it's a very different universe where we're participating in here today. The best part about this capital formation is it does drive the economy. We have these companies that are raising capital to enhance communities, to employ individuals, and develop to be larger.
Right, and there's this big macro trend, right, that pension funds used to be this big investor. Pension funds are now net sellers as they pay for retirement, but the 401ks are getting rolled over to IRAs. Those IRAs are then managed by financial advisors, and that capital needs to get deployed, as you said, to continue to develop communities, employ jobs. So it's very interesting how this kind of evolution is going. What are some of the strategies that is garnering the most capital these days?
Sure. Here at ADISA, there's been a legacy of real estate opportunities, whether it's an existing development to add value or ground up development, even adaptive reuse. We see a lot of real estate. In addition to real estate, more often we're seeing other companies who maybe have IP or are operating companies looking for that additional capital. The universe continues to expand. I think it's a great reminder here at ADISA as to how large the investable universe really is.
You're right. People really relate to real estate. I definitely agree with you that there's been a lot of investment there. I'm also seeing more and more people get involved in private credit and private debt. Are you seeing that same trend?
Industry-wide, certainly have. I have a personal bias and a professional bias towards debt. It's what I grew up with on the bond side of markets earlier in my career. And the best part about the debt markets was returns are calculable. It was easy to estimate what the return should be, and it was contractual as well. We have seen a lot of debt, specifically on the real estate side as well. There are two ways to invest. You can either own something or you can loan. Owning is the equity. Loaning is the debt. So you as an investor might own the debt. It's not necessarily a bad thing.
Right, and just like the stock market, owning equity gives you generally more potential upside, where you're in a safer position on the debt side.
Very true. And as we look, as the advisors and registered reps look to find those opportunities for their investors, they should probably be thinking about the function that investment could provide for that portfolio. It's not necessarily going to be equity or debt, but a lot of the reps here and the ones I speak with are looking at what a specific investment does. Does it generate income? Does it enhance the growth? Does it reduce volatility across the portfolio? A good investment will do at least two, if not all three of those.
Right. The investor cares about the outcome. What does it do for me? So as you're setting up a platform at your firm that then financial advisors can present to investors, what's your process?
This week here at ADISA, there are over 80 sponsors I get to interact with. And they're all looking to raise capital for various functions, as we've already discussed. We want to see a sound process. We want to see some experience that tells us they have capacity in achieving those objectives. We also want strong controls in place from the company that give us greater certainty to the funds, to our investors' capital being secure and working towards that eventual outcome. That's just the starting line. There are many levels we proceed down with it. Further conversations with each sponsor, including many site visits, to better understand their objectives and many times how that story could work with our registered reps and advisors and relate it to the investors.
Completely agree. And one of the things that I like about some of these direct investments is the business plan is not really complex. Like a business plan for Apple, Google, all the things they're involved in, very complex. These are raising some capital and we're going to invest it in this type of property or this type of group of properties, or we're raising capital and we're going to make these types of loans. And then they're going to collect the loan payments, or they're going to collect the rent, package it up in the form of a dividend, and give it right back out to the investors. So it's very simple to understand from that side.
It certainly can be, versus when you're looking at a large market cap, multi-billion-dollar traded company with many moving parts. Here, the market cap of all these smaller company might be raising 50 million or 500 million, and it's a lot simpler to understand and follow the flow of capital throughout that development.
So we know that investors really like advice from advisors. What is the most popular structures or the most popular asset classes that are attracting capital?
When we go back to real estate, it's an easy one that everyone knows and exists, and they drive by. It's physical. It's an asset they see. So that will always have a place with reps in this industry who can tell the story easier. There are other companies, as we're seeing, that are maybe have IP or intellectual property and have a growth trajectory and need the next round of funding to achieve those goals. Not as easy to see, but still many exciting stories that can achieve that same outcome.
Completely agreed. Kyle, thank you for sharing your thoughts on how direct investments drive the economy.
No, Greg, thank you for having me here. A wonderful conversation. And it really, again, just the bottom line is the investable universe is much larger than what we typically see in the news.
Yes, agreed, 100%. Thank you for watching another episode of Focus on Alternatives. Again, for more information, please visit adisa.org. Thank you.